Hey, good morning, everybody. Jason here again. All right, third time's a charm. Hopefully, I don't get interrupted by work or texts or anything else or accidentally hitting my camera somehow. Anyhow, first things first, I want to go through a couple questions that I've had. Um, Rolling versus closing, and then opening up another put credit spread. Why do I just choose to roll? It's just a one transaction for me. It's very simple. You can see it takes a couple seconds, but as far as money wise, am I making any more money? No. Am I saving anything? No. It's just I have a placeholder on the stock price, and I already know that's what I want to do, so I'm making it one simple transaction. If you were to close it and open it back up within a few seconds of each other, you would have the exact same play at the end of the day. Now, on some brokerages, these are the two caveats, but it does not apply in Robinhood. If you had a brokerage that charges fees per every transaction, and you can do one transaction instead of two, that may be an advantage. And then if you have a brokerage like Tastyworks, you can actually see that option. So it's actually pretty neat because let's say I have the one put credit spread and I roll it and I roll it and I roll it and I roll it, let's say for months, which I have some of those, you can actually see what that's done over time. Like as you keep collecting more and more premium. So you'll see a $500 collateral and maybe it's collected $2,000 or something over time. And it's pretty cool to see that. So that would be another thing, just so you can see what your history is. It's documenting everything that's happened with that particular spread and your rolling of it. But essentially, for the most part, no advantage. Secondly, why would I roll something out in time? Like, what's the advantage of that? So when I only have $17, and I believe that's what it was, maybe $17 to gain in 2 weeks, a little over $1 a day on a spread. The only two things I can do to gain more money from that is either roll it out, so more extrinsic value, or I can roll it up in strike price, or a combination of those two. I can roll it out and up and gain even more premium. In my case, I chose to roll it out. It's a very safe play to me, and I just want to have a variety of strike prices and dates. I know I have a lot bunched up coming next week, but as far as strike prices, I want to have some that I think are just a given. So like a $600 strike price, I think is just a given. That's essentially money in the bank. I don't want to get too cocky on that because the market will probably slap me and teach me a lesson by saying that. So that is not what I would like to happen here because I said that. But if something is super far out of the money, so I was gaining an extra $20 or whatever by just waiting an extra week. So now instead of $1 something a day, maybe I get a couple dollars a day. But I could, if I just let it expire, it would just take 2 weeks and I'm not gaining too much. So, and then as far as like advantage, disadvantage, etc., remember one key thing is the market is fair. It is fair, fair, fair. The more risk, the more reward. So for every action that I take, I'm taking on, more risk for more money. And that's why there's, people can say this is the best, this is the best. No, there's not the best. It's just risk to reward. So let's take a look at the plays that we did make yesterday. So we grabbed the 795, 800. We're up a couple hundred, 250% on this. We paid $11 for these. In case you haven't done a call, this is a call debit spread. So I paid for this. That's why it's a debit. And this is a high risk to reward play here. So you can see I only paid $11 for it. What's my maximum reward? My maximum reward is $500. So stock prices moved up, so we're up quite a bit on this already. But this is a way for a small amount of money, $11, I can have some really good upside on the move that I believe is going to happen with Tesla, which is over the next week and at least until the 23rd is just quite a bit of upside. Oh boy. Come on. So that's a maximum $500 gain there. We did grab these 790, 800s. This is a maximum of $1,000 gain. We paid $74 for these, up 150%. And then that following week, we grabbed some 890 900s, maximum gain of 1,000. Well, and we paid a whole $35 for these. We're up 100%. And actually, maximum gain is a little bit less. So it is the $1,000. The difference between these 900 minus 890 is $10 times 100 contracts is 1,000, and minus the premium received. So it's not actually 1,000, it's only $965 is what our maximum gain would be. And that's only if Tesla goes above 900. Otherwise, in the interim between now and then, if it goes up quite a bit, we could close it out, we could sell it, and probably make some profit. Like right now, we could just take our 100% and run. But that is not why I bought it. That's not my thesis, and I'm not going to. The other play I bought this morning was an 810 call expiring the 23rd. Just thinking a little bit more about it, and I feel like we are just going to continually have run up. And since we've had a decent breakout above 700, I don't know how far it can run. I'm sure it'll meet some resistance along the way, but I want to take advantage of some of that upside. And this one I will look to turn into a free debit spread. And by free debit spread, this is what I mean here. So we paid $425 from this. As soon as we get $425 back out of this, it's free. So right now we're up $200. So take a look at this. This is what I will do. This is expiring on the 23rd. So that, oh boy, $425. So I bought this 810 call right now for that same price, that $425. Oops, clicked too fast there. For that $425, I could sell the 830, which gives me all of my money back, and that would be a free play. That'll cap my upside. So if Tesla happens to go up to $900 by the end of next week, I'm not going to make quite as much. My maximum gain will be 2,000, but I paid zero for it essentially. So I'm gonna look to do that. It'll probably be, I'm gonna wait till it maybe blows off some steam here, but I see a lot of good upside. Other than that, looks like we're starting the day pretty good, up about 12,000 or so. And any questions on any of that, please let me know. I will do my best to answer, since I'm probably not making a whole lot of plays this week and next week. I have a lot more time to do so, just because I feel like whatever's in motion is already in motion. And not a lot of movement to be made until after earnings. All right, guys. Love you guys. Thank you. Let's go and make a lot of money.